Well, good afternoon. You're watching Closing Trades on ET now, and we have petered from the day's highest point. In fact, at one point of time, we were just 20-30 points away from those all-time highs and the level of 23,400. From there has been a bit of a cool off, and we are below the mark of 23,350 right now. Having said that, Bank Nifty is underperforming a bit, but if you look at the broader markets, that is where the strength is. So the mid-cap and the small-cap indices are trading with a gain of almost 1%. So that is where a lot of action is, and even the advance decline ratio is favoring the advances as we speak. So a vibrant, broad-based market is what we have at our hand. Additionally, it's also about India VIX coming off quite materially. If you look at the India VIX right now, that's down as much as 10%. It's below the mark of 15 now. So from those levels of 26, 27 that we had seen just around the election time, all that volatility has been sucked out of the system. And now we have the VIX, which is a lot more normalized, just around that 15 mark. In terms of the heavyweights right now, it's ONGC, which is up a good 6%. We did hear the comments coming in from the Petroleum and Oil Minister as well, not just on the gas space, but even in terms of the oil marketing companies, the refining capacities that are coming up, and the fact that the government is actively pursuing the agenda of bringing natural gas, petrol and diesel within the GST ambit. The minister also talked about that perhaps this year, or at least in the near term, they're not looking at privatization or diluting stake in a lot of companies, which has been viewed a bit mixed by the market. Separately, we have Tata Motors reacting to the Investor Day update that we have got. That 200 basis point expansion in margins for the passenger vehicles is definitely something which has been liked by the street. You also have L&T, which is up 2.25%. On the losing side, Kotak Mahindra Bank is coming under pressure. Dr. Reddy's is down. But Aisha, from the broader markets, I think a couple of themes which are working out are clearly agri, as well as this Prime Minister Awas Yojana scheme. So a lot of these builders, NBCC, Varroc Engineering of the world, these are the ones which are fairly active.
Oh yeah, absolutely. The first announcement coming in from Modi 3.0 government, and that was about the 3 crore houses in the pipeline. The fact that they announced that 4.2 crore houses constructed over the last 10 years, unchanged loan rates may actually induce vibrancy in the entire affordable housing segment. Look what's happening to some of the housing financiers, and that to low ticket ones. Look at Hudco, for instance. That stock has been on a tear, and that's really been the case all through this week. Today as well, it's higher by 6.25%. 283 is where that stock is. Home First Finance, Awas Financiers, all of these names are holding out very smartly in trade. Tata Motors as well. On the sidelines of their Investor Day, they've talked about, strong FCFs, which they expect to continue. The CV momentum, they say, is going to continue for a long period of time. So net-net, it's been a very positive commentary. They're talking about JLR to be net debt free in FY25, and expecting NCLT nod for the PV as well as the CV merger in about a month's time. So that's Tata Motors in trade for you, holding up about roughly 2% or so. OMCs, like Anisha as well, was flagging off after Hardeep Singh Puri taking charge of the office once again. He's talking about how oil PSUs are in process to issue green hydrogen tenders. Efforts are on to bring petrol, diesel and natural gas under the GST ambit. Most of these stocks are holding up very, very smartly in trade. But on that note, let's take it across to our experts and find out what they're making of the market so far, and where is it that there is fresh investment opportunity as well. Sunil Subramaniam, we've got Naresh Mirani as well as C.A. Rudramurthy all joining us on the show right now. Gentlemen, hi, afternoon. Naresh, let me start off with you. Range, but then again, we've sort of found our feet around that 23,350 plus mark actually now on the Nifty futures. What's the trading range that you're calling for the Nifty right now?
The range is being formed as of now. So if you have to look at the previous range, so the previous day before candle 22,800 was the the lows, and before that also somewhere closer to that with which we closed. So 22,800, 23,000 is the support on the downside. And now we could be forming a new range over the next 3-4 sessions, wherein it could maybe shift towards 23,100, 23,200 as the bottom. And on the upside, closer to say 23,600, 800. But the bias is positive. The broader markets continue to remain positive. We are seeing sectoral rotations as such. So the bias is positive, but we may not see a similar spiky move as we saw last week. So we could be in a slow move right now.
Okay, so that's the call at the index level right now. But say Rudramurthy is with us also on the show. Rudramurthy, what's your sense on the market? Because the bank nifty is clearly flat, but it's a broader market which is showing you quite a bit of vibrancy. Is that the bet right now? Broader markets or mid cap, small cap versus large cap?
Yeah, good afternoon. Thanks for having me in the show. So first of all, Nifty and Bank Nifty having made a big move post that verdict what we got last Tuesday. Now it is the time for mid and small cap to do the catch-up job. So for me, both Nifty and Bank Nifty will see some amount of time-wise consolidation here, but I'm very, very bullish on market. And even after seeing yesterday portfolio, which more or less remains with the same people who were there last term, and even if you see the short positions which were earlier there, they are getting covered. So both technically on chart as well as the fundamental news flows which are there, I'm saying this is a market to still buy every dip and there is no shorting whatsoever. And broader market, as you were asking, they can definitely outperform now, having seen at index level a big outperformance last week. So to be very specific on levels, Bank Nifty for me has now made a bottom and 49,500 will be a very strong support. Every dips to those levels can be bought. And similarly on Nifty for me, 22,500 is the strong area where market has just made a long-term support there. And now for very short term, every dips to 23,200, 250, I will be buying. Even at current market price, I'll be buying both Nifty and Bank Nifty. All-time high is just a matter of few points which it will cross. I expect more short covering and fresh buying. And yesterday, for the first time, both FIIs and DIIs are on the buy side. So I expect this market and this rally to continue. Broader market will outperform for some time.
Broader market outperformance here to stay. Let's cut across right now. We've got Prahlad Joshi, who took over the charge as the Minister of New and Renewable Energy. Let's hear out what he has to say.
More confident. 100 डेज का प्रोग्राम आर.के. सिंह जी पहले मंत्रालय देखते थे, उनके नेतृत्व में हमारे जो अधिकारियों का आर.के. सिंह जी के नेतृत्व में तैयार किया है। वो पहले 100 डेज का था, बाद में 125 डेज का हुआ है। उसका भी मैं समझता हूँ, रिव्यू भी लेता हूँ, बाद में आपके साथ डिटेल में मैं बात करता हूँ। थैंक यू, धन्यवाद जी, थैंक यू।
Well, given the government's focus on the renewable energy sector, given the stock market's interest as well in that sector, hoping that the minister will have some few new announcements as well lined up once the 100-day agenda is in place. But for now, it's ONGC sitting right on top there. GMR Infrastructure has been holding out very well, a good 5% dash coming in on that stock. There you go, ONGC, currently at 273 thereabouts. GMR Airports, 91.70 on that stock. IRCTC has been holding out very well, another 5% dash coming in there. Gujarat Gas almost scaling up 5% higher, and Concor as well higher by about 3.6%. Sunil, hi, afternoon. Welcome to the show. You know, we were just chatting about outside the studio how it's been a week now to the election verdict and what was happening last Tuesday to where we are currently, pretty much around the all-time highs. What is it that you've done in the last week? Were you a seller in Tuesday's weakness and then a buyer thereof? Or were you buying on Tuesday when everyone was in panic mode?
Yes, we were continuous buyers because the panic was essentially a concern driven around the coalition dharma and how that would affect allocations of the government to capex and all of those kind of worries, whether the government would indeed be, strong, would the two main support partners of the NDA, drift away or not. So I think these are all things which distract. And so for us, any such corrections were buying opportunities. So not at all an issue. We've been continuous buyers through this process.
Did you buy more of the same, or there was a bit of a different theme this time around when you were going out to buy? Because I'm trying to understand, have you started perhaps looking at broadening your horizon into a lot of rural plays, staples, etc. as well, or you're continuing with the PSU themes and the spaces which have been doing well?
No, I think the slight shift, sector rotation into the consumption and like you mentioned, the broader, lower, the rural consumption. See, one of the things with coalitions is that you'll definitely expect a little bit of more revenue expenditure to go down the thing. We may think that even Narega subsidies could go up a little bit. So I think the budget will give a clearer direction, but we do know that given the fact that the election results were not to the kind of expectations of the government itself, they will be trying to fix those problems. And from what you can see, that two or three big states in north, UP, Haryana, then the Maharashtra, where the results were not to their liking, right? You would see that that's a farming belt. The UP is a sugarcane belt, Maharashtra sugarcane belt. So definitely you will see action around minimum support prices. You will see action around Narega flows in there. So I think that consumption as a sector, and from a more broader, you've seen a K-shaped kind of recovery in consumption clearly at high-end SUVs, larger houses. Those kind of things are the ones which are basically driven consumption. The broader consumption hasn't picked up fully before the elections. We think that in the run-up to now the budget, as well as going forward, there will be a little more increased focus by the government on, given that there's a big state election in Maharashtra coming up in 6 months' time, definitely there will be a slight change in the government's allocation and plans, and consumption will be the beneficiary of that. So we have been adding consumption related, we already had them, just that we're topping it up now.
Other than consumption, Sunil, which you just flagged off, you think some of the microfinance or small NBFCs, small housing finance companies as well is the theme that could be looked at?
Absolutely, because see, housing has that the double-edged advantage that it's a consumption indicator, right? It indicates people's outlook towards life, and they're buying more houses, I mean they're more positive in consumer sentiment. But it actually reflects itself in infra-related stocks and sectors like cement and steel and building materials and and this stuff. So I think housing is a very, very good thing from the government's perspective. It also creates construction, creates employment generation also. So it kills multiple birds with one stone, if I may use that word, that phrase. So from that point of view, I see a lot of emphasis. It came through in the Mr. Modi's announcement yesterday on the rural housing. But overall, we are very bullish on that because even with the interest rates going up and the EMIs going up, affordability houses is still at a 25-year low, right? So it's very, very affordable now. So I think that housing is definitely something that, and companies which finance that, especially those which go down the income pyramid, right, to the bottom of the pyramid, I think that's where there will be a little bit of growth. And so, yes, that's definitely a sector of interest to us.
Right. Okay, Sunil, hold on to that thought. We're going to take a very quick break on that note. Still holding on to our gains, but let's see what transpires in the last lap of trade.
Welcome back. Well, a lot of sectors buzzing around, especially from the oil and gas space. So you, of course, have ONGC, which is trending higher. Oil India is having a good day. And then a couple of other companies from that entire basket is also doing quite well. Remember, the oil minister did talk about the fact that they're willing to bring in the natural gas as well as petroleum and diesel products into the ambit of GST. We did speak with Harshvardhan Dole earlier in the day. He's, of course, the oil and gas expert joining us from IIFL Securities. And he talked about that is one of his top expectations, that some of these products will come under the GST ambit and hence will improve some of the visibility for the stock prices. In fact, listen into a slice of the conversation we had earlier.
Key thing that I would like to see in the sector over the next 12 months is inclusion of natural gas under the GST. And that should actually bode well for the entire gas utilities pack, including the CGDs. As of now, I think within the three CGDs that we track, IGL is a preferred pick because it has mastered the technique of balancing volume and price growth. Mahanagar Gas, which is trying to revive the volumes, unfortunately is sitting on peak margins. And therefore, even if the volumes were to grow, the margin compression basically will more or less offset that, leading to muted earnings growth. And therefore, we do not like the risk reward in Mahanagar Gas. Gujarat Gas, unfortunately, also is sitting at the peak margins. And a lot more things have to happen in addition to GST for us to turn favorable in case of Gujarat Gas.
Sunil, curious to know, where is it that you find value, if you do at all, in the entire oil and gas pack?
It's hard to find value. I don't think value is a term at all to use in the current market in that sense, right? So you can only say where can there be unexpected surprises upside, where there's value. Because everything is reasonably good news is being priced in across the market. And unless you are very confident that in some case the upside can be much higher, right? That's where a sense of you buy growth at this price, expecting a this growth rate, and comes better, then you make profits from that. So I would not go around carrying a value hat at this point in time.
That note, we'll let you go. Thanks so much for making time and speaking with us today. Well, the other pocket, which is actually getting a bit of a steam right now, is the entire sugar pack, right? You have, of course, Shakti Sugars, Triveni Engineering, I beg your pardon, all of these stocks seeing a bit of a move right now. Within the oil marketing space as well as the sugar space, Naresh, is there any bet you would like to take?
So, in terms of the oil marketing companies, they still look interesting because the longer term structures are still positive for a lot of these names. So, BPCL, HPCL look the best. So, if you look at a longer term chart for BPCL, the stock had topped out around 550 in 2017, then in 2019, and then in 2021 topped out at 500. So, that we've broken out above the 550 mark. In the recent move from 500, the stock went to 680, made a double top over there, and now retested that 550, 570 mark as well. So the retest is done. From here on, we could again be going back towards 680. So at current levels, BPCL and HPCL look promising, as well as IOC. Even ONGC looks interesting. So I would wait out for the sugar pack as of now, because there's a lot of volatility generally in those stocks. But I would go with OMCs and ONGC.
Rudra, some of these, buoyant railway-related themes, and I just want you to flag off for us. IRCTC, considering in the last lap of the rally in the railway stocks, this was an underperformer, so to speak. Now it's clearly come to the fore. What is it that you see on the charts? It's 1,027 thereabouts right now.
Definitely, Aisha, from February, this stock is consolidating in a tight band of around 910, 900 zones to higher side around 1100. So right now, if you see for a very short period on chart, 970 holds a very strong support. So at current market price on every dips to even levels closer to that 970, I will be a buyer on IRCTC. Definitely, this is a stock one can have in their investment portfolio. Yes, I expect very soon levels closer to that 1130 to come, and once it breaks decisively above 1130, a fresh up move can be seen in IRCTC. So a definite buy at current price, and for very short term, keep a stop loss at around 970 and keep buying every dips from current market price.
Right, okay, that's the take coming in right now on IRCTC. But we were just flagging off sugar, so let me take that conversation forward. We've got Mr. M. Manikam, the CMD at Shakti Sugar, joining in on the show right now. Mr. Manikam, afternoon. Can you hear me clearly?
I can hear it clearly, no problem.
Okay, very well. So I just wanted to understand this ethanol blending target of 2025, which the minister today revised upwards to 25%. What does it really mean for the industry?
This means actually more sugar will be diverted from edible sugar into ethanol. We are talking about some surplus of sugar and the industry is asking for export of sugar. So this will help in reducing the quantity of closing stock.
Okay, so that will be taken from the edible sugar portion as well. But do you think that it could cause a fillip in the prices back home in terms of the domestic supply demand situation?
See, right now, last 10 years, the government has been maintaining the domestic price below cost of production. Okay, we should be at 40, 44 rupees now. We are only at 38. So if the prices go below this, even now the farmers are having a problem. We are not in a position to pay the farmers properly. So if it goes below the current prices, I think you will have a crisis of the farmer. So you need to, now with the surplus sugar coming in, which is coming in about 3 million tons, then again you will have pressure on the farm front. We will not be able to pay the farmers until the cane prices come up. Sugar prices come up well. So this idea of blending more of ethanol will basically take away sugar from the sugar market into ethanol and give a balance to the industry.
If you could put it in some numbers, what's the overall, quantity or the liters of ethanol which has been provided by the street by the industry for this blending, and what it could increase by as opposed to what it is right now?
I don't have the full numbers as yet, ma'am, but going to 25%, there could be an increase of about 20% of consumption as of today. So I'm not able to give you the exact numbers because I don't have it on hand. but the increase will be roughly about 25%. And I would think maybe about 1 million tons of sugar will go down. We have a surplus of 3 million tons. So maybe about 1 million tons of sugar will be used in this.
Mr. Manikam, the government had last year imposed restrictions on the use of cane for ethanol production as well. Do you fear that any such kind of restrictions may prop up again?
We are already under restriction right now. They have not removed the restriction. So now they will have to remove the restriction to make sure that we are getting this kind of production.
Mr. Manikam, given the fact now elections are behind us, do you expect that easing to happen soon? And any other expectations from NDA 3.0?
Come again, ma'am?
I just wanted to get a sense that now that elections are over, is there a possibility of easing now, whether it's the export restriction, whether it is the use of cane restriction, and any other specific ask or agenda that you see for NDA 3.0, because the budget is also likely to come? Anything on your wish list right now?
Right now, we are asking for export of some sugar. That is a possibility in the wish list. And also, I think, an increased ethanol blending. These are the two things required for the industry to get the prices stable.
Okay, and you did answer my question with respect to the prices of sugar, but what about the prices of ethanol itself? Because it's been a while that we haven't seen the ethanol prices being revised. Now, in order to push this agenda of higher blending, is there a possibility of increase in prices of ethanol as well?
I think they should. Actually, voters, look at every other country, they will match the gate price of the petrol. Today, you're selling petrol at 100 rupees. So ethanol should be sold close to 100 if you are looking at, without taxes. If you're talking about green fuel, you're talking about saving the environment, why subject that fuel also to tax? So the ability for the government to pay up to 100 rupees is there. So for them to increase the ethanol price, I don't see a problem, but it's a matter of will and mind of the government to take the decision.
Manikam, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you, ma'am.
Okay, that's the view coming in from Shakti Sugar right now. In the meantime, let's just take stock of what the sugar stocks are up to. They, of course, have been one of the sweetest pocket in the market today. But let's get in some closing ideas as well on that note. Naresh, anything on your list?
So that would be a buy on Dalmia Bharat. We are seeing a recovery across the cement pack. Dalmia Bharat is one of the names which actually corrected the most, down from 2400 to 1700. A double bottom done here and is making a reversal above that 1850, 1900 mark. So could go up towards 2100 in the short term.
Right. Rudra, what about your closing trades?
United Beverages looks very good, and even for me, United Spirits is also very good. So McDowell is a buy at current market price. One can even trade long in futures, and United Spirits at current market price in futures can be bought. Looking at target of 1400, and one can have a stop loss at 1300 for this long trade.
Last few minutes, there has been a bit of an uptick on Ashok Leyland, and HCC has finally managed to be very close to that upper circuit mark. It started off with a gain of around 9 to 10%, slowly built on to gains, and right now it's around 19%. Rudra, before we head into the break, a quick word on HCC as well as Ashok Leyland.
Definitely a better buy than HCC, only if you are a short-term trader and you want to play for 5-10% kind of a gain, or if you are a very 1 week kind of a time frame trader, then yes, you can buy HCC. So specifically on HCC, first of all, today it has given a clear breakout above levels of around 46. So closing above 46 is very positive. And yes, today the breakout above these levels of 46 has been with good volumes. So I will be a buyer at current market price with a stop loss of 45, looking at targets of around 52 to come on HCC. But it should be taken only by short-term traders and not by anyone who wants to put it into portfolio. However, if you see Ashok Leyland, it's a different story altogether. Yes, in fact, automobile as such has performed very well. And for me, Ashok Leyland non-stop has made a big move from those levels of around 185, 190. Once it saw that breakout, from there non-stop move has been seen to current levels of around 237. So I will be waiting to buy Ashok Leyland on any dips or on opportunities where, because of overall market correction, if you get Ashok Leyland at around 225, 230, I will be a buyer. And you can look at targets of around 255, 260 to come on Ashok Leyland, a good stock to have in portfolio.
Okay, point noted. Time now to head to a very short break, and when we come back, we'll discuss the last 30 minutes of the trading session.
Back with closing trades right here on ET now. Holding out okay, about 117 points higher for the Nifty futures. The oil and gas pack, of course, is the one which is raring to go, and that's been holding up very well. Gujarat Gas, ONGC, the other ones which are really leading the charts right now. L&T, of course, is supporting the index. Tata Motors, the street is like the Investors' Day takeaways. Maruti, Adani Ports, Hero MotoCorp, they're all your buzzers in trade. From within the broader end of the market, of course, there's a GMR Infra, IRCTC, Gujarat Gas, BHEL, which has been clocking some solid gains for the last two trading sessions. That are also looking very good. But for more buzzers, let me take it across to Ansh and find out what he's been spotting.
So GMR Infra will be the first stock in focus in today's session, as the stock has given a breakout from its horizontal resistance zone, which was intact since start of May. The stock has also touched a 3-month high level with volume of over 3 times its average trading volume of last 20 session. Also, there are high chances of the stock getting into ban list for tomorrow. Apart from this, Piramal Enterprises is also in focus, as the stock has also given a breakout from its horizontal resistance zone from around 833, 834 level with volume of around 1.6 times its 20 session average volume. Varroc Engineering is also in focus, as the stock has given a breakout from its cup and handle chart pattern, which was intact since start of Feb, and the stock has also touched a 5-year high level today itself with volume of over 17 to 18 times its average volume of last 10 sessions, indicating very strong participation in today's move. Lastly, Gabriel India will be in focus, as the stock has given a breakout from its reverse head and shoulder chart pattern, which was intact since start of 2024 with volume of over 5 times its average volume of 20 session. So keep an eye on the stocks.
Thank you so much for that. We will watch out for these names. But in the trading session, you have PNC Infratech, which is down 8%. IRB Infrastructure, on account of that, block deal is down. And in fact, talking about block deal, Indigo as well as Honasa Consumer are also down in the trading session. Mahantesh Sabara joins us on the show now. Mahantesh, will you use this dip as a buying opportunity on the likes of Indigo and Honasa?
Both these companies have very profitable outlook. So generally, a dip should mean that one can take a bite of these companies. But, if I look at Indigo, you're entering the lean season right now, and therefore one needs to be a little careful when it comes to the airline stock. As far as Honasa is concerned, they are in for a little tough competition ahead. So one would rather wait out what the management would like to say post these dips, post this, equity changes, etc., to really make more sense of it. As it is, the overall market seems to be a little shaky right now, and therefore we might have an effect on these two stocks coming in if the market overall dips.
That has been sensing a lot of panic after CBI has searched the homes of some of their corporate office members. It's arrested a few employees as well, it seems, and that stock has been gapped down from the word go. Right now also lower by about 8% as we speak. Some of the other ones, TRIL, that's been a buzzer from the word go. The QIP opened, the floor price set at about 699 thereabouts, so that stock has been a buzzer. And like Anisha was flagging off, there's a bunch of block deals which have happened, IRB, Honasa being cases in point today. Reliance Power though, that's up 10%. The company has now become debt-free on a standalone basis, and they've managed to enhance their operational competence as well. But Mantesh, many say that about power as well, along with the financiers, that's also an overvalued pocket right now. Would you say wait it out, let some of the fizz actually ease off to make a fresh entry, or even make add on to the existing positions?
Actually, within the power sector, if you look at the distribution companies, then I would say that they have been simply overvalued. Power Grid romping ahead into the overvaluation territory is clearly visible. But some of the companies on the generation side, particularly those which are coming with projects on the solar or renewable energy side, can look pretty attractive. So it is all about the capex thing, because overall the country will soon get into a power shortage kind of mode, and power generation will be the thing to look forward to, not necessarily the distribution. There is enough overcapacity already seen on the distribution side.
Point taken. So that's a view coming in on some of these power stocks as well. But talking about power, there is of course this entire buzz around the PSU sector, and the biggest debate is whether one should book out the profits that they have made after the big rally that we have seen, or is there going to be perhaps a pause as far as the growth is concerned. We posed this question to a whole host of our experts as well. Listen into what they had to recommend.
If there is earnings growth, then you look at the PE and then you decide whether to buy or not. But otherwise, anything to do with PSU going up, I think it was a sentiment-driven rally, which in all probability will stop.
I think what will continue, in my opinion, same building, push on infrastructure, push on manufacturing. Prime Minister has spoken many times about, how we need to become self-reliant. So I think those policies will continue. I think, the reforms, especially in some of the critical sectors, will continue. I mean, whether it was power, infrastructure, everywhere, I think lots of things were happening, and maybe, they will continue. Especially one sector where I think it can become bigger is probably power.
I think given where valuations of the private sector units are, the capex continuity, particularly in railways, defense, power, the private counterparts are actually trading at significantly higher valuations. And when you have a situation when the internal machinery in the PSUs is being geared up for growth and creation of market cap and rewarding shareholders and all stakeholders, I think there is a case for a re-rating in the PSU space, even from these levels.
In fact, post the Interglobe Aviation block, we caught up with Jinesh Joshi as well from Prabhudas Leeladhar on his take on the stake sale by the promoters, the company fundamentals right now. Here's what he told us.
Typically, promoter exits are viewed with suspicion, and given the fact that we have been seeing Mr. Gangwal exit for quite some time, obviously this 2% stake sale has indeed come as a surprise. But I don't think we should be reading too much into it, because the fundamentals are pretty much intact. And I think this is after a long time that they have decided to exit 2%. And again, there is a 1-year lock-in from here on. So I believe that we shouldn't be reading too much into it, and we are hopeful that the delivery will continue from here on. So they reported about 8,400 crores in terms of PAT in FY24. That was a record number. For 25 and 26, we are maintaining a similar profitability levels. So although we expect yields to remain at about 5 odd, but in 26, perhaps what should I say, the fuel cost might rise a bit. So we are not very gung-ho in terms of profitability, but if yields can surprise. So for instance, for 1Q, they have mentioned that their passenger RASK is similar to what they reported in 1Q of FY24. So if there is any element of surprise which comes through in the form of better yield, given the fact that there is an artificial scarcity created because of the higher number of groundings, which is giving them a better command in terms of pricing, then you can see some bit of an upgrade come through. So that is how I would like to sum it up.
Okay, so that was about Indigo, of course. But Mahantesh, what's your view on the pure play EPC infra companies? For the longest time, we hadn't seen any buying interest per se. And I'm talking about the HCCs, the IRBs, the other companies like HG Infrastructure, PNC Infra, KNR Construction of the world. Wasn't much buying interest, at least on the institution side as well. Do you see things changing? Because this morning, of course, there was that Elara note as well, calling HCC a big turnaround candidate with almost a 60% upside from yesterday's closing.
Yeah, I think EPC companies can potentially do well, because, it's all about the order book that they will start getting in. With the new government formation you will see infrastructure activity, particularly road building kind of activity, start picking up. Alongside, you also have a host of metro projects coming up for completion, which requires that last bit of push when it comes to construction activities. And fortunately, many of these construction companies are also into real estate building. That is, they construct a lot of real estate that helps bring in useful amount of business. You've seen that last 2 years, the residential home sales has been growing up quite rapidly, upwards of 20% thereabouts. And you also have now office space, that is commercial, as well as rental real estate build-up starting to happen. So these developments augur really well for construction companies overall.
Okay, in fact, talking about HCC and the construction and the entire fillip which is expected in the current government, hear out what Mr. Ajit Gulabchand of HCC had to say on the matter.
Like to see is two. One is GST. I think it's time to bring the GST down to one rate if it's possible, if not more than two rates. Make it more uniform, make it easy to do. Today it's still a bit more cumbersome, and there's too much bent on those whom your suppliers don't pay the GST, you are liable, which I think they have to start streamlining and make it easy for everybody and not put the burden of one on the other. One. Second important thing that is required apart from GST improvements is contract handling. I think commitment to contracts and simplifying, settling disputes faster, because dispute is a part of doing many contracts, and given the infrastructure we want to do, we will have many differences, and the sooner we can address them, the faster will the infrastructure happen.
Okay, and talking about those infrastructure names, take a look at HG Infrastructure, another 2% gain in the last few minutes itself, so almost a 10% gain on that stock at a 17% actually in the last few minutes, totaling to that. Viatech Vabag is the other stock which is showing signs of a bit of a reversal. Water infrastructure, of course, has been that big theme that has been working quite well for these individual names. You also have Aadhar Housing and Awas Financiers, Hudcos, all of these Prime Minister, Awas Yojana plays. In fact, talking about these housing finance companies, Naresh, is there any NBFC or these housing finance plays that you would want to bet on?
That name, LIC Housing, comes up top in the list. The stock has been range bound for the last many months. Before this correction on election day, the stock had made a bottom around 560, a top around 680. That got tested almost 4 or 5 times. We were about to break out on the exit poll day, and then it corrected again. Now we are slowly coming back towards the 680 mark. So if it sustains about 680, it would be a breakout of the last 4 months and could head up well towards this previous all-time high of 750, 800 band. So that looks the most promising. The next ones also, the charts are strong across the board, whether it is a Repco or a PNB Housing. But my pick would be LIC Housing out of the names.
In fact, earlier in the day, we also caught up with Ajay Kanwal from Jana Bank, and he was talking about their growth roadmap. He was also confident of being in the sweet spot right now of high growth areas currently in the economy.
We have a very large customer base because we've been in business since 2008 as an NBFC. So about 1.2 crore customers. If I look at the home loan penetration, it is in single digits. Our home loans to GDP is among the lowest in a peer group sense when I'm talking of countries. So I have so much to do on the asset side. And I think we have developed an expertise, we have developed a culture, we are in 180 cities. We know how to operate this machine. So will I do something very different? Unlikely so. On the asset side. I think on the liability side is where the universal bank will be a very big help to us. Because we do, even today, while we have now been over 6 years as a small finance bank and we are listed and all of, so is my peer group of small finance banks, and we have grown a lot. I still think we pay a bit of premium for liabilities. And I think our premium will come down that we pay customers. I think our growth rate will be more, while our growth rate is very strong. We grew about 36% last year just on liabilities. I do think we'll have more sustainable growth if the word small finance changes to a universal. Our bias really, Nikunj, then is to serve underserved. And when I say underserved, it doesn't mean people are only economically poor. We think there's a lot of opportunity in the MSME segment, both in inland trade, financing them, and helping them grow as we really want to see. Economy goes 5 trillion, unlikely the small and medium enterprise won't require bank support.
Right. Mantesh, just looking at the market construct, the fact that one set of major cues are behind us and the overhang is lifted, both the government formation as well, as the portfolio allocations are done. Do you think the market could get into a bit of a consolidation ahead of the next event, which is going to be the budget?
Yeah, I think it will get into consolidation mode. In fact, I'm getting a little edgy. I told you earlier also that the overall market situation doesn't appear too healthy, simply from the point of view of valuation. I'm not talking in terms of earnings growth and thereabouts. It's that the valuation stretch has become too large for the markets to really be sanguine about. So if that is the case, then we should go through the consolidation phase followed by a small down move, valuations getting corrected, and then we will see a secular up move with earnings momentum. The larger the earnings momentum, that sector will see obviously a valuation expansion. Lower the earnings momentum, that sector will see valuation compression. So that is likely to happen ahead. One of the key things that we have noticed is that in this entire rally, there were a lot of growth that was happening in MNC companies. I think the MNC index has outperformed the overall market quite sharply, and that's become a high overvaluation zone right now. So that should correct.
Sure, just wanted to highlight what's happening to the market because again in the last half an hour, 1 hour, there's that acute pressure and the selling that comes in. So yesterday also it was a pretty much a mirror image that in the last half an hour there was that sudden downtick at the start of the day. This time around, start of the closing trade show. Today it's happening at 3 p.m. but nonetheless there's a sharp fall underway. So we have let go of that mark of 23,300 and I'm just trying to check which are those major drags at the index level right now, and we should probably pull up some of the candlesticks as well because Reliance Industries is down and it's contributing 30 points to the downside. You have ICICI Bank which is given up. Kotak Mahindra Bank is coming under acute pressure, and then you have ITC and also Infosys, which is batting for the bears today. In fact, Mahantesh, as far as the entire private banking gamut is concerned, I'm talking about ICICI, Kotak, HDFC, it's almost like, one step forward, two step back. They're pretty much not moving at all. What or when do you see a turnaround in these names?
Actually, within the private sector bank, there have been two large banks who have been laggards. HDFC Bank is one of them. Kotak Bank is the other one. As far as ICICI Bank is concerned, I don't think that it is a case of one step forward, two step backwards kind of thing. It's been more or less steady and steadily growing. Having said that, it's got to do with not business fundamentals, but more to do with promoter and overall group level issues which they have not been able to sort out. So you have on one hand HDFC trying to digest the merger with HDFC Limited, and you have Kotak on the other hand trying to juggle with a lot of subsidiaries, and even there is this overall promoter overhang that was seen in the past. So to me, these two banks have been laggards. They have fundamental issues surrounding their promoter entities per se and overall corporate level actions. But business fundamental wise, banking sector should start doing well. That is why we saw most of the public sector banks doing well. State Bank particularly having outperformed the market by a wide margin. So don't necessarily single out the private sector space per se, but one would single out Kotak Bank and HDFC Bank as the laggards.
In fact, let's hear out what Manish Sonthalia as well earlier today told us about banks.
FY25 earnings growth is going to be led by technology, banks, oil and gas and metals. And in that backdrop, and when we are talking about the 15% sort of a growth, and given the backdrop where financials are currently, they haven't really done too much in fiscal 24. I think there could be some catch-up game played by BFSI. And within that, obviously, private financials also has a role to play because they would have the highest weightage, so to speak. But what we need to watch out for is normalization of credit cost, and sooner or later you would have peaking out of cost of funds. And even in the fourth quarter, we did see that we didn't see too much of a dent in the margins. And credit growth in the system, would mean that a 15% sort of a loan growth is very much doable. So across the BFSI space, both the private sector and the PSU sector, you would have specific names where there is valuation comfort. So I think it's a pick and choose. Valuations are much more sanguine in the public sector banking space, and also quite reasonable even the private sector banking space. So from that point of view, I think BFSI stands in a sweet spot as we speak.
Okay, so that's a take coming in from Manish Sontalia. But Tata Motors is the stock which is actually holding up in the green right now. Of course, those were the investor day takeaways that we would run for you on the screen, because the company is talking about how they plan to become net debt free by the end of the coming year, as well as the fact that they're looking at margin expansion of 200 basis points when it comes to the passenger vehicle segment. They're calling the longevity of this commercial vehicle cycle as well, saying that it's expected to stay for longer. Those lines will continue running for you on the screen. But in the meantime, let me toss it to Rudra first to get a sense as to what he makes on the charts, and then we'll take the question across to Mahantesh as well. But Rudra Murthy, what's the take on the charts of Tata Motors?
Last 1 month, it has just made a consolidation and it has just given breakout above levels of 970. So for me, after this very short-term breakout, yes, it will go back and test its all-time high levels of around 1050, and above 1050 closing, a fresh move on the upside will come. So at current market price, definitely a buy with a stop loss of 970.
Mahantesh, now your view on Tata Motors, will you buy it afresh, or would you buy rather those Ashok Leylands or other companies which have more CV exposures, the likes of M&M, etc.?
See, as far as Tata Motor is concerned, they have done wonderfully well in terms of recovering from the past losses. So the business momentum is quite strong with them. The passenger vehicle business is doing well, gaining market share, and doing profitably well enough. You also have a situation where the JLR is turning around and should start delivering net positive cash flows and bring the overall debt levels down. But there are two worry spots that come to mind when it comes to Tata Motor. One is on the commercial vehicle side. They have been losing the plot in terms of the overall market share losses that they have. There seems to be a little, thought process put behind what new products, what new launches, what new areas within the commercial segment to really offer. And the other spot is of bother seems to be China, which could affect JLR. And we really don't know what is the long-term plan they have with the JV that they have with Chery. That should soon start unwinding and could potentially give a hit to Tata Motors. So while the business momentum elsewhere is quite strong, to me there are these two worry spots: the commercial vehicle segment and the China factor within JLR.
Right, okay, that's the take coming in on Tata Motors right now. Let's get in some BTST trades as well before we start winding up for the day. Naresh, what's on your list?
So first is a buy on Dalmia Bharat, a double bottom reversal real stop loss at 1870, target price of 1950. Second is a buy on PVR Inox, has finally crossed a 3-week high. The stock has made multiple tests of that 1300 mark. Looks like a reversal in play. Stop loss at 1365, target price of 1420.
Right. Okay. And Rudra, what about your BTST ideas?
See, for me, SAIL looks very, very strong, and above 150, it is clearly sustaining those levels. And metals as a sector also looks very positive to me. So SAIL is a buy. Target of 155 for BTST with a stop loss of 149. And for me, Biocon looks also very, very strong. Stock specific, I like Biocon. Again, on charts, it can move till even 400, 450 zones. But for very short term and for BTST, looking for target of 355 with a stop loss of 340.
Point taken. In the meantime, let's run you through what's lying in terms of the agenda for tomorrow, because it's going to be a hectic day, especially with respect to the kind of data flow that we'll get. The trade data, the CPI data, as well as the IIP data for India will be out tomorrow evening. So watching out for all of that. From the United States, we'll get the FOMC rate decision. So that will be very crucial. Of course, for now, nobody's expecting a rate cut, but it is expected to happen from September onwards. At least the part of the street is penciling that in. So the commentary around that and the commentary around inflation will be fairly important to track. Today, of course, was the investor day for Tata Motors. Tomorrow is the day for Tata Communications. It's expected to be post-market around 4 p.m. But nonetheless, the stock might stay active ahead of that. Sobha, the board is also likely to meet there to mull a fundraising plan, so we'll be watching out for that company. As well as tomorrow in the political arena, there would be the oath-taking ceremony in Andhra Pradesh as well as Orissa. So we'll be watching out for these states with respect to the political developments, because pretty much at the centre level things have subdued a bit. We saw all those cabinet ministers taking office today. So after that, it will shift to the local and the state election scene, because at the end of the year, there are a couple of important states which are lined up for the political arena. In fact, let me quickly ask you, Mahantesh, anything that interested you, surprised you, or shocked you with respect to the portfolio allocations? Because we were all waiting with bated breath as to who gets what, but it was pretty much similar to what was there in NDA 2.0.
I don't think there has been much to really take as a takeaway from the cabinet portfolio allocation. But yes, we've had a big change that we have seen as far as the civil aviation ministry is concerned. Probably that's something which is a notable feature of the overall cabinet portfolio allocations. Otherwise, there seems to be not much that one can read into the overall allocation. Most of the ministers have been repeated. Particularly from the market point of view, the finance ministry remains with Madam Sitaraman. So we should be quite happy about that in terms of overall continuity of policies thereof.
Okay, so point taken. Yes, the other notable change for me has been, of course, the power ministry, wherein Mr. Manohar Lal Khattar have actually taken over versus Mr. R.K. Singh. So let's see what he brings on board, because for now we had seen that push towards renewable as well as that entire market coupling, etc. Would there be a delay, and would it impact the likes of IEX, etc.? Will be interesting to track. But as I pointed out, a lot of events tomorrow to track. So ahead of that, what do you do, Naresh? Do you carry forward your positions? Because it's been fairly volatile. India Wix has come off, but there is that bout of selling that comes on every rise.
So even after that bout of selling, we are ending up, say, roughly flat almost. So it does not make it a very sharp selling as such. So carry on to the positions. Keep trailing keep a trailing stop loss below 22,100 on the Nifty. And stock specific price action is more interesting. We've hit a new all-time high on the small cap indices as well. Mid cap indices also made a new all-time high today. So stock specific could continue. Index needs to take a breather. So we are getting into a range for the next few sessions, but the bias still remains positive.
Global setup as well is getting a little wobbly, because if you just look at how the European markets, for instance, have started off in trade, they've started off about 0.5% down across the board. In fact, the broader indexes like a FTSE MIB are now down a good 300 points, and that equates to about a 1% fall. I just want to quickly check in on the US futures as well, because they too are pretty much a sea of red. Of course, it's not a big crackdown or anything of that sort, but over 100 points down for the Dow is what the Dow futures already are indicating. We're winding up for the day. It's been a range session, as was the case yesterday as well. We've given up all of our gains, all of our losses. We're closing in absolutely flat for the day, 23,257. The broader market outperformance, of course, continues, because you've got the Nifty small cap holding up about 0.5%, and the mid cap index as well has done okay. Media, oil and gas, infrastructure, cap goods, power have been the leading sectors today, and the underperformers, much unlike yesterday, cement, metals, pharmaceuticals, and FMCG as well, which is closed in flat. Banks as well have not really participated. So Kotak Bank has been a drag today. Reliance, ITC have been drags on the index. Sun Pharma, even though one of the brokerages was calling it a consistent compounder just this morning, that stock as well has closed in the red. ICICI Bank, Axis have all weighed heavy on the index today. ONGC, of course, that was part of the tug of war on the other end. Tata Motors, L&T, Maruti, Hero Motocorp, autos definitely have led the charge along with the oil and gas space. From within the broader end of the market, Gujarat Gas, IRCTC, the entire sugar pack, all those stocks have done very well. Petronet LNG held out by about 4.5%. HCC was a big mover today. GMR Infra as well has had some solid gains for itself. And then, of course, after that block deal, Interglobe Aviation was down 4.5%. Cement, like I said, saw some profit taking. So Ramco was a laggard. But on that note, we're going to wind it up right here on this edition of Closing Trades. Thanks for watching.
If you like this video, then like, share and subscribe to ET Now.